The Precious Metals Week in Review, October 23rd, 2015. Brought to you by Precious Metals International. Markets continue to be volatile, with stocks seemingly rallying each time more news is announced that might push the U.S. Federal Reserve back from raising rates in the near term. The number of Americans filing new claims for unemployment benefits jumped by 3,000 claims for the week ending October 17th, to a new seasonally adjusted level of 259,000. Unemployment claims continue to run below the key level of 300,000 that economists view as a sign of an improving jobs market. The number of people still receiving unemployment assistance after an initial week of aid rose by 6,000 to a new level of 2.17 million for the week ending October 10th, which may indicate that despite what appear to be declining layoffs, hiring at companies has not begun to take up the slack in the labor market. After September's weak non-farm payrolls report, October's report will be eagerly anticipated by Fed watchers to see if job creation in the U.S. continued to slow during October. Another weak jobs number will very likely mean the Fed will not be able to raise rates in 2015. China announced that it was cutting interest rates for the sixth time since November on Friday, in another attempt to boost its flagging economy. The People's Bank of China, PBOC, said on its website that it was lowering the one-year benchmark bank lending rate to 4.35%, a cut of 25 basis points, effective starting Saturday, October 24th. The PBOC also said on its website that the one-year benchmark deposit rate would also be lowered by 25 basis points, taking the deposit rate down to just 1.5%. Rumors began circulating on Friday that China might be moving closer to having its currency included in the International Monetary Fund's (IMF) special drawing rights, which is a basket of currencies that include the US dollar, the yen, the euro, and the sterling. The IMF said in a statement following reports of the rumors that it was currently finalizing a report to be considered at a formal board meeting scheduled for November. The decision on the possible inclusion of the RMB, yuan renminbi, in the SDR basket will ultimately be made by the IMF's executive board when the meeting is held in November. The official gross domestic product GDP figures for China were released on Monday and showed that the economy expanded by 6.9% in the third quarter, down from 7% in the previous quarter, but better than analysts' expectations for a figure of 6.8. Skepticism remains around the official figures released by Beijing, particularly when they come in exactly in the middle of economists' expectations and the previous month's official figure. China begins its fifth plenum next week, which is a 4-day policy meeting held by the ruling Communist Party that will likely see the drafting of a new 5-year plan for China. This will be the first 5-year plan produced under President Xi Jinping and will likely address the forecast for further economic slowdown in China. Beijing is also expected to announce its new target for annual growth, and that figure will be closely watched by analysts. If the current growth target of 7% is maintained, it could mean that Beijing stands ready to unleash further monetary stimulus to try to boost the flagging economy. A weaker growth target figure could mean that Beijing is willing to hold off on further stimulus while it awaits improvement from previous measures. In Europe, the European Central Bank, ECB, held interest rates at record lows after its policy-setting meeting, and ECB President Mario Draghi told a press conference at the conclusion of the meeting that the degree of policy accommodation will need to be re-examined in December. Most analysts took that statement to mean that the ECB was considering either expanding or extending its bond purchasing program known as quantitative easing past the original expected end date of September 2016. Crude oil remained mired in the mid-$40 a barrel range this week, despite a fall in U.S. oil rig counts for an 8th straight week. China continues to be the main drag on the price of oil as analysts reduce demand forecasts based on the slowdown in the Chinese economy. The euro spent much of the week moving sideways against the US dollar, but saw a steep decline late on Thursday, triggered by the ECB announcement that it would continue its quantitative easing program well into 2016. The decline continued into Friday, and the sudden drop resurrected discussions on when the euro might reach parity with the US dollar. The euro will end the week lower against the US dollar. The Japanese yen spent the week drifting lower against the US dollar and also saw a sudden drop on Thursday. The yen tried to recover ground on Friday but lost momentum and plunged lower again. The yen will also close the week lower against the US dollar. Volatility should be expected to continue. Hurricane Patricia, the strongest storm ever measured since record-keeping began in the Western Hemisphere, is taking aim at southwest Mexico this weekend. The storm is packing sustained winds of 200 miles per hour, with gusts likely exceeding even that figure. The U.S. National Hurricane Center warned that the storm would likely make potentially catastrophic landfall on Mexico's Pacific coast late Friday, and warned that powerful winds and torrential downpours of rain could trigger massive storm surge damage and deadly flash floods. The storm spun up from just a tropical storm on Thursday to a Category 5 hurricane literally overnight, a wind speed increase of 109 miles per hour, and was the fastest tropical intensification ever recorded in the eastern part of the Pacific Ocean. There are no oil assets for Mexico in the affected region, but the speed of the intensification caught many residents and businesses in the region completely unaware. So storm protection measures are likely to be incomplete by the time the storm makes landfall. The economic impact of the storm's arrival in Mexico will not be known for several weeks at best. Though oil resources in Mexico may not be affected, any mining operations in the region near the point of landfall will obviously see significant impact. The storm is expected to weaken as the weather system crosses mountain ranges in Mexico and makes its way into Texas through the weekend. In Asia, China's central bank opted to undertake further monetary stimulus measures following the release of the official GDP figures on Monday. Their decision to cut interest rates further takes effect over the weekend. The fifth plenum of China's Communist Party will kick off next week, and it is likely that any economic effect from the latest interest rate cut will not be felt prior to the meeting, but the flagging economy certainly will be discussed. In Europe, the ECB hinted following its latest monetary policy meeting that it may be considering either an expansion of its existing quantitative easing bond purchasing program or extending the life of the program past its expected September 2016 end date. The news immediately sent the euro plummeting lower against the US dollar, and media outlets all began discussing the possibility of the euro reaching parity with the US dollar in the near term. A strengthening US dollar would likely have a negative impact on the US economy as it becomes pricier for US manufacturers to produce and export their products. The US Federal Reserve remains data dependent on its decision to begin raising interest rates, and the stronger dollar could also put additional pressure on them to hold off on that decision while they analyze further economic impact of a stronger dollar to the US economy. News out of Syria was relatively quiet this week, with Russia and the U.S. apparently avoiding any mishaps or further ruffling of each other's feathers in Syrian airspace. On Friday, however, U.S. Defense Secretary Ash Carter revealed that U.S. forces had taken part in a raid to free Islamic State hostages in northern Iraq after they saw the prisoners' graves had been prepared. Mr. Carter said that U.S. service members were present in Iraq solely in advice and assist roles, and that American forces were not supposed to enter the firefight, but he revealed that one American serviceman had been killed during the raid. The ongoing crisis in the Middle East, brought about by the civil war in Syria and coupled with the growth and power of the Islamic State, commonly referred to as ISIS or ISIL, throughout the region, remains the largest source of uncertainty that is immediately facing all of Europe. The ongoing migrant flow into Europe as they flee ISIS and civil war in Syria is placing severe economic strain on peripheral countries, many of whom are already suffering from weak economies. Greece, in particular, has been hard hit by the influx of migrants fleeing the Middle East for the perceived safety of Europe, and it appears that resentment over the presence of these migrants is growing there and elsewhere across Europe. As China's economy slows and the uncertainty across the Middle East continues to drag on European economies, wise investors continue to take advantage of temporary price dips in physical precious metals to acquire more product as part of a well-diversified investment portfolio. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, October 23rd, 2015. Brought to you by Precious Metals International.